Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob, and best of the season.
And best to you, and we've now got New Year's Eve to get past.
Well, before we get there, we've seen some pretty dramatic moves in the Dow, and the Canadian market not quite as reactive at all.
Yeah. Of course, I think a lot of world players were playing the senior stocks in the U.S. because you got better liquidity in those, the Dow and the S&P, and they wanted to be in on the action, and they were in on it. And then, of course, it had at least the Dow and the S&P had a nice high in September. But the one that we focused on was the New York Stock Exchange Composite, which a year ago was going straight up with huge momentum, and it peaked in January. And we talked about the number of big speculations that had concluded in the December-January window. Gold in 1980 and Nikkei on the last trading day of 1989 and others. So that was a probable high. And on the New York Stock Exchange Composite, the momentum on the weekly RSI got up to 89. And at the peak of the dot-com bubble in 2000, the NASDAQ got to 84. So here you had the stately New York Stock Exchange Composite Index outperforming the NASDAQ back in the dot-com bubble. So that was a distinctive. And then we had the snap correction there down into February, and then recovery. And our view was that things could be good through last year until after mid-year, and we used the sunshine followed by twilight after August, and then the twilight zone in the fall, which we got. There were most of the bubbles, and just put it this way, all of the great financial bubbles since the first one in 1720 collapsed in the fall. Heavy liquidation into October, rebound, and then with the last of the kind of troubles being cleared out of the markets in November. But there was one that we mentioned a number of times, the 1825 bubble, which really was a magnificent one, and its problems didn't clear until Christmas of that year. So we had kind of like, this is the sketch on things that may be bad into end of the year. And then also it was tied to crude oil. And it had a seasonal high on October the 3rd at 77. And then as we wrote, that it could go down to a dismal low in its usual seasonal period of December to January, and we're not yet into January yet, so there could be another shoe to drop here. But the excesses on the downside became measurable, very oversold, and we'd say at about the right time. So I think, Jim, if it has to test those dreadful lows and work on so it can spend some weeks hopefully putting in a base from where you could have a nice rebound, a tradable rebound in the first quarter. Then also we're going to look at the seasonals for crude oil, as I mentioned, December, January, and you won't know it's in until it's over. But an improvement in crude price would very much help the markets. And then the other one we had, of course, was the base metals, and copper in particular. It can have a low in November, which it approximated, and then, so it's been stabilizing. So there's a likelihood that the industrial commodities, again, once you get past the seasonal low for crude, could improve in the first quarter. But I'd look at these as technical rebounds helped by some seasonality, but we want to look at how much damage has been done to the financial markets. And one of the wisest lines I've read in all of that financial history was in The Economist magazine, and in the 1873 crash, which was in the fall. It was a very good bubble, both in England and in the United States. And it got the fall crash, pretty severe one. And the Economist pointed out, or the line was, while the panic may be over, the results of the panic are not over. So this recent week suffered, which you could call panic selling. And this kind of a panic is an event, and it was tied to changing credit spreads and changes in the yield curve that are typical of ending of a great boom. So I think we're going to use the conclusions of The Economist, is that the results of the panic are not over, which would be an economic contraction. You got to go back to the promoters behind the establishing the Federal Reserve System in the U.S. is that they really believed that with the Federal Reserve, and as they called it, the lender of last resort, that it would be able to prevent the credit crises and credit setbacks, if you will, that preceded recessions. So that was the theory. And there's been 18 recessions since the Fed opened its doors in January 1914. So the theory really doesn't work. So this is also going to a serious economic contraction. We've had a serious financial hit, and then if it's followed by an economic contraction, that's going to be one more recession that the Fed would have been expected to prevent. So I think the public will get quite critical of these policymakers who have exposed trillions of dollars of taxpayers' money to try and prevent bad things from happening. And of late, bad things have been happening in the financial markets. Bad things. Jim, doesn't that sound like a name for a Stephen King novel?
Sure, we're attacked by our toaster this morning. Yes. We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. Bob, President Trump has been very critical of the U.S. Fed. Does that have any effect on it, or are they insulated from criticism?
Unfortunately, they haven't been insulated from criticism, but they are now will be vulnerable. Last summer when he took a knock at the Fed, I thought, President shouldn't do that. And then as the market developed and looked like it was going to roll over into a crash, well, let's call it, into heavy liquidation, I thought, no, he's right, because he's putting the blame on the Fed and for rising interest rates, but that T-bill rate is still going up. I would have thought, well, sometime fairly soon, the short rates would have gone down, but I think Trump has been right to criticize the Fed because it takes the blame and puts it on the Fed when actually it's just the way market history is working, and reduces his part of sharing the blame. So I think it's been quite the right move, is to put the blame on the Fed, and actually all you can blame them with is being far too easy with the money supply, easy credit, and it has made the boom bigger than otherwise. But there still would have been a boom. I mean, you're in the period of, like, you have the long commodity boom that reached its best in 2008 when crude oil got up to $147 and the action was extremely overbought. So then the action shifts over to speculation in financial assets. So first of all, commodities, then financial assets, and then after financial assets turn bad, the public turns to cash. It protects itself. So these are the great events: speculation in commodities, tangible assets, then speculation in stocks and bonds, financial assets, and then speculation in cash. And it drives the academics and policymakers mad, because in the early 1930s they had posters in many retail shop windows condemning those who were hoarding cash. It was evil. But it's the way the financial markets work, so there is a probability that we could be in a classic post-bubble contraction, and this will be told on the next intermediate rebound in the financial markets. If they can crank it up into a new bull market, then the contraction would be deferred. But my guess would be, Jim, that it was a classic boom and a classic climax, and then actually you're going to use the term again, a classic liquidity crisis. And so we'll have some relief for a while, but I think contraction is highly likely. And then you have the other problem, is that domestic politicians will be looking at domestic unemployment numbers, and if we go into recession, the unemployment numbers would be bad, and hardship and all that sort of stuff. So then they will then turn to protectionism to protect their economies and protect their workforce, and actually it makes the whole thing worse. So one should understand that when you're in a boom, everything conspires to add to the boom, and then when you're in the contraction, everything conspires to reinforce the contraction. And it could be ugly, but we're not there yet.
We'll have more with Bob Hoye right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, with all of this contractions and expansions happening on a daily basis, are we looking at precious metals as being a better bet?
Yeah, it shifts over, and here again, one of the characteristics of the last part of the bubble is that the gold sector underperforms, and it can even actually decline, which we have had. And I follow it through the real price of gold, where you take price gold in the senior currency and deflate it by the CPI inflation count. And that had its peak in 2011, which was the peak of that was a fabulous speculation that concluded. But now the real price of gold over the last year and a half, we can say that it's basing. It's no longer going down, and we're watching for it to turn up. But in the meantime, I guess beginning about 5 or 6 weeks ago, we advised that people should begin to accumulate gold stocks on weakness, and the reason for gold stocks is I think it'll outperform, the stocks will outperform the price advances in gold. And actually gold is acting okay, but the other thing about a post-bubble contraction is that the real price of gold goes up through the contraction, and it makes gold mining very profitable. And then you have a very speculative market in gold, even though the price of gold in dollar terms may not change too much. If you're in lesser currencies, you'll make money in gold. But the universal thing will be the gold stocks. And we're content with our position, and the market's going our way. And it could be a lengthy bull market in the gold sector, which would be nice to see, because it's been a very lengthy bear market.
Bob, have a great Happy New Year.
And you too. We will have a little celebration, but not a big celebration. What about you guys?
Not enough to alert the local authorities, no.
Very good then. All the best, and the best to our listeners too.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Best of the season.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.